a overview of when it's mostly time to pay attention. These are not by themselves the execution patterns, but spotting these early on can have a huge benefit for your trading. So the first things are obviously the market environments. There are many different names. The most common ones are obviously the ranges and trends. Then the ranges themselves are often called accumulations and distributions. For a auction market theory principles, you often hear balance and imbalance in the markets, and there are essentially the same things. Markets are really either in a range or a trend. There is not really anything else when it comes to the markets. The thing is that things are not usually as kind of simple as are described in a lot of kind of a courses and a lot of perfect examples. I will be showing some examples later on, but what is kind of important to know is that identifying these things in terms of kind of a expectations for your trades. If you will be executing trades in a range and you will expect market to run for a kind of a distant targets, you might get just burned because it will reverse on you shortly after. Same if you will be in a strong trend and you will just try to fade the trade. Fading is going against the underlying trend and playing any sort of mean reversion trade, which you would be doing in a range, that you will also be losing money. So the market environments are important to understand, and it's not a complicated concept. It's not hard to say if market is in range or in trend, and throughout the examples we will kind of look into that. But what I also found out is that it's quite a bit of a concept where markets can be, for example, range on one time frame, but trending on a different time frame. So for me, what is more important is to focusing on kind of a solid setups that go in line with the flow of the market, the time frame above me, basically. This means that if I day trade and I execute trades on a 5-minute chart, I want to be looking at the hourly time frames, and if it's in line with kind of a flow of that hourly chart. And I can show you this kind of example real quick, which just came in mind because this happened recently on Bitcoin. Basically, last week before this huge rally, there was this kind of a move which happened on BTC where this is a 30-minute chart, and we went down, and you can see that we put this kind of a failure candle and market start to sell off to the downside. So this seems to be on a 30-minute chart kind of a no-brainer trade. We're just gonna go short and market will just continue to make these kind of a lower highs and will continue this 30-minute downtrend. Well, even if you take a look on a daily, this is not looking extremely bearish, but looking at the H4 for this example, we are basically at the H4 level of support, which is more of a 4-hour uptrend, I would say. Or we broke the high, market is kind of a drifting higher. If anything, I would consider this to be more of a range than a not really a downtrend, basically. So, and after this is the situation right here, and you can see how we kind of fail to do any significant close under this H4 level of support. So this is one of those things when focusing too much on on the market environments can actually cause a little bit of damage, because you will just kind of get stuck in one time frame and lose focus on setup itself. So the market structure, market don't behave as conventional wisdom teach, obviously. If you take a look at any sort of textbooks, you have always these perfect higher highs and higher lows, lower highs and lower lows in a downtrend. In reality, markets not really, like that. You have a higher low on this H4 chart on BTC. This is a lower high, lower low. This is a higher low. This is not really too much of discussion about that. Market still goes down. So, and it's kind of the structure is breaking all the time. So it's really outside of the teachings of the conventional wisdom, and once again it's one of those things where if you start to pay too much attention to it, you will just it's not going to do you any good. But the shifts in structure can be useful in a trade execution. When looking at the market structure shift, look at low that made a highest high and the low and the high that made lowest low to be broken. So this will be covered in some execution patterns, but for a kind of a bearish structure, this is the low. Let me change this again, sorry. Basically this is the low that produced the highest high. Once that is broken and market is at any kind of a key reference point, you want to be starting to pay attention to. Same as this. This is the high that made the lowest low. Once that is broken and you have overall trade idea, market is at kind of a key reference point, you want to be starting paying attention to. Outside of your levels of trading, watching the market structure is not really extremely worth it. But when it comes to something like a trade management, for example, trailing your stop based on a market structure is one of those things that it's just a good thing to do, basically. If you will be too aggressive, you might get taken out early, but it's still managing a trade, and I will talk about that a little bit more later on. But in trade management, expecting this perfect kind of higher highs and higher lows is not going to be hurtful. Okay, we have a chart of Bitcoin once again. Simple kind of a price action. Let me change this. So high, higher low, higher high, higher low, higher high, higher low, higher high. This gets broken. Okay, this is your kind of a break in structure I mentioned. You can also look at something like this, although there is not a higher high here, basically. So really once this gets broken, this is your break in structure, and then market proceeds to retest this kind of a level. This is this thin move to the downside I mentioned, and sells from there, and then this is basically the high that made this lowest low. So once that is broken, you will get on really a kind of a shallow pullback here, but then you establish a level of SR at the level, and market just continues again. For this kind of a current downtrend, the low that made the high, I would say it's this one. So you can see this wouldn't give you any kind of a time to get into the position. You have a very small level in here. I will talk about this a little bit later, but yeah, this is where you can kind of the market structure is not a perfect thing, but when it comes to different patterns and executions, it can still be useful. The support and resistance, obviously, very very simple trading concept, most likely the the simplest one of any price action. What is worth to mention, what people usually have wrong, is that support and resistance levels are getting weaker with amount of touches they have. Obviously, it's because there are just orders resting at those levels, and more and more these levels get tested, the levels are getting weaker and weaker. So you have people wanting to sell at this resistance, they will get fill some, gonna sell again here, there are no orders left here, market will essentially break the level. Below and also above, there are also a stop orders from traders who are anticipating breakouts. So for example, you have this level of resistance, people will place a stop buy orders above the level, expecting market will just break it and continue. What will often happen, market will break it, these people will get filled, and then it will sell off down to the downside. Break and retest of SR provides a strong setup. The more prior touches the level had, the better the level is. So simple as that. As you can see, we had a level of support here and here, then we had a little bit of touch here, but as you can see on that third touch, there is not an interest to kind of a trade here. Market will make this kind of a small bounce into the next kind of level of SR, which is this level of support. There was a small resistance there before. Breaks the level, makes this once again the liquidity gap, the inefficient move to the downside. Later on it gets filled, the prior level of support gets tested as resistance. It's really a simple as that. Another level of support, which is here, you have 1, 2, 3, a lot of touches, then it's essentially a break. And you can see how these opportunities, this is something I mentioned, come when these levels are probed. Every time the prior level, not because you can see that if I draw a line here, these are not bringing such a huge bounces, but once market breaches the level, make this kind of a false break, if you will, it makes a large move. Same as here, very small bounce here, then we trade below the level, large move above. Okay, so simple SR trading. The supply and demand is the variation of classic SR, and you might have heard terms such as supply and demand, clusters, the failure to returns, the order blocks, and so on and so forth. It's in reality, although there are many speculations why these things work and why they don't, they are just levels where the high volumes were executed before the kind of the market went into this inefficient state, basically. This is why you will often find naked points of control there. I will talk about it a little bit later, but the areas of supply and demand are really simple as that, and you can see this on a chart, this is a gold chart here. We have a resistance kind of here, market then proceeds to break it, and rather than make it as this SR flip, which would be somewhere here basically, it retraces all the way back to this a demand zone, or cluster, I call these clusters, where the highest volume got executed, and this is also the naked point of control basically. Once this gets hit, market will continue. Okay, and also the kind of this is a little bit squeeze for a classic SR traders who got in somewhere here. They are a little bit in pain, thinking that market will continue going down, especially after this. This is one of those breaks in structure. I mentioned how they are not extremely reliable, because market is just coming from this leg basically to the level where the most volume was executed and finding a buyers again there. This is all due to the order stacking, filling the thin moves which are here, coming into levels where the large orders were executed. This is something that I already covered, so I hope this makes a little bit more sense when I show you on the chart like this. V reversals are usually happen when markets hit any sort of a key level, and it's just a signal of a large pickup of buying and selling at the level. What they look, market will make this kind of a sharp sell-off, but instead of any sort of continuation, it will be just quickly back up. This often happens in crypto, but also in any other markets, and there are two types of V-shaped reversals you should be paying attention to. The first one is this kind of a strong one where the market is really going to break the kind of a high that made a low. Once again, this is a market structure move. This is a good one. This is really a strong signal of buyers are stepping in, but there is also a weak version of it where, although market is going to quickly bounce from the bottom, it will start struggling when it comes to this point of kind of where market released at this level. So looking at chart, this you cannot see. This is a Euro USD, and this is the AUD USD, two quite highly correlated pairs, but you can see that both of them had this kind of a V bottom, but Euro really break this kind of a high that made this low, broke the structure again. Then it's going to once again retrace to this price pause where the volumes are accumulated. This is the same thing as this right here. I don't have a volume profile chart, but if I would, you would see that the highest kind of a volume from all this leg is when this market really made this price pause. This is an H4 chart, so you don't see that clearly, but if I would go to like 30-minute, you will have this sort of a small range where the volume got accumulated, going to hit on a retest, move high, trades up to this double top. But the AUD USD makes the same kind of a V-shaped reversal, and then once it hits this kind of a point where market broke to the upside, it starts struggling, and you have this the patterns which I will cover later on, where it's just it's not able to break the prior resistance, makes this kind of a swing and fails, and sells off from there. So two types of the V reversal. A lot of people are getting really excited once they see market is quickly buying back towards the sell-off, but it's important to watch how market is going to behave once it's reached the top of where the sell-off basically started. Obviously the same things goes the opposite. You can have a V reversal tree kind of opposite side, which you can see, for example, kind of here. Okay, so V reversal, the triple taps, topping and bottoming structures, markets basically makes a 3 drives before any reversals. Okay, if you're gonna take a look at the chart, this is a crude oil, and you can see how you make a 1, 2, 3 drives to the upside. You will sell off, once again more of a inefficient move, it get retraced, more sell off into 1, 2, 3 drives, and market then moves higher. To be quite honest, I don't have any exact explanation of why this is happening, why market often drives 3 times before the move. It is what it is. It's just kind of a pattern that is happening over and over again. I don't really trade these blindly, although you can, obviously you can see the support, which you had a clean failure on that third drive, so you can pick up the trading idea from it with kind of a confluence of this being a third drive. So that's that, but for me this is a important more than this. But these 3 drives are just something to pay attention to, because they just simply happen over and over again. Okay, so these are different structures you will see markets making on all time frames over and over again. They are not standalone execution situations. I'm not picking simple trades, because only of these things. Only thing that is more actionable is this one, which I will cover later on. But you will see this happening, very often, and you will also see patterns, which the execution patterns I am about to cover in the next video, happening in confluence with these levels. So it's something which is really worth paying attention to. Okay, so let's jump into the next one.